Global outsourcing is when a company that operates itself globally decides to outsource or obtain some services or goods on a global basis to match its operating activities. One of the three relationships, I won't say it was failed, but it was certainly challenged. And I think both sides are committed to making it work because they're in the middle of a 7-year contract. The problem was that the purchasing company really wanted to maintain its way of doing business. Its solution to this problem was to prepare a very detailed service level agreement, or SLA as it's known in the trade. And this SLA prescribed much of the processes to be used in HR, like hiring, training, promotion, eligibility, talent identification. Its business model, which is fairly consistent for this company, is based on standardizing what can be standardized and hiring relatively low-level but competent providers who can deal with standardized HR transactions, and then to have a much smaller set of HR experts that can respond as needed around the globe to exceptions that arise. The purchasing company wasn't really happy with that because its HR needs at the local level were being serviced by what it saw as mere clerks who were just trained to process standard activities, and if problems arose or exceptions arose, these all had to be referred up the line to the experts, and this created delays and lack of responsiveness, and surprisingly to the purchasing company, every one of these resulted in extra billing, and it really inhibited innovation and made the relationship strained. With hindsight, it's easy to see that both sides should have seen the future need to innovate, because no business relationship is static. Philips, the Netherlands-based electronics high-tech company, really did their homework. Philips realized in advance that as the relationship progressed, there would be a need and almost a requirement for both parties to innovate. And Philips' solution that it worked out with its provider was a gain-sharing plan, that if one side or the other found a way to innovate that would save money and increase the efficiency of finance and accounting operations, or add new levels of service that were found to be needed, then both sides would share in those cost savings. That turned out to be a very powerful incentive that caused the relationship to be, I won't say frictionless, but cooperative.